Happy Friday, traders, and welcome to the end of the week. Okay, so look, the big news this week that has moved markets and also made markets nervous is obviously the situation that is happening in Iran. So at the beginning of the week, we had Trump, and he had some very strong rhetoric with respect to Iran. He basically said that he has cut off all communication with Iran, and that help was on the way for the protesters. So the world and markets, basically took that to mean that it looked like that military strikes were imminent. So we did see markets move on the back of that. So we saw crude oil spike. So crude, which was trading sub $60 and has been languishing for quite some time, spiked up to highs of above $62. Which is highs that we haven't seen since August of last year. Now I'll just take you back to June of last year when we had the 12-day war between Israel and Iran. Crude was sitting around that about $60 mark, and it spiked all the way up to $77 in literally just over 1 week. So we got almost a $20 move on the back of that war. So no doubt, if something did happen between the US and Iran, it's obviously going to be a lot bigger than the Israel-Iran war. You could say, I think conservatively, you'd probably see at least a $20 move higher in crude. Look, we also did see this geopolitical tension help gold. Obviously, gold did make, it's a raging bull market, doesn't need much, but obviously any tailwinds it welcomes. It did trade new record highs this week, 46.40. There has been some resistance around that level, so we've seen some multiple daily highs around about 46.30 and 46.40. And at the moment, we're sitting just below those sort of levels. Obviously, a break above there technically is going to be bullish, and we'll probably make a run for 4,700 at some stage. But look, those geopolitical tensions also did weigh on equities a little bit as well this week. But anyway, in the last 24 hours, Trump's rhetoric towards Iran has softened somewhat. So yesterday, he in a news conference, he basically said that Iran has stopped killing the protesters, which is a positive, and also they had cancelled the mass public executions. So then the market took that to read that military strikes may not be imminent. So the market that was affected there the most was crude. So overnight we saw crude drop like a rock. So crude was down about 4% at one stage, and it's closed just above $59. So it slammed back below $60. Now, look, this is a fluid situation. No one really knows what is going behind closed doors with Trump and in the US, and exactly what they are planning. And certainly Trump is not going to tell the world, the exact plan and the timing of what's going on. Because obviously he wants to keep that element of surprise. So look, we are going into a weekend, and look, if something did happen on the weekend, no, it would not be a surprise. But certainly what you need to be careful and vigilant is that potentially there is gap risk this weekend. So if something did happen on the weekend, and generally when you do see the US going in with military strikes, like we saw with Venezuela recently, they do it on a weekend, and they do it on a weekend for the simple reason the markets are closed. They do not want to see markets crash or see some bad volatility on the back of these actions. And then hopefully if the dust settles a little bit on Monday before markets open, they're going to basically stave off that negative volatility. But in any case, no doubt traders aren't going to want to go and short gold or short crude going into the weekend, or chasing equities bid on the close either. Okay, so yes, look, the traders have got to be mindful of this situation because it certainly is fluid and unresolved. But just looking forward though, if something did happen and We did see the regime fall in Iran and a regime change, and saw the Iranian population dancing on the streets. I would say that would be extremely bullish for markets, and I would be buying risk aggressively. I think you're going to see one of the biggest one-day rallies in equities. That'll probably be up well over 5% in the day. But obviously it wouldn't be good for something like gold. It could be smashed $200, $300. But certainly that's something to watch out for down the track. Anyway, look, the rest of this week's been pretty quiet. Really not much action that's really been market moving. Obviously we did get some US CPI numbers at the beginning of the week. They came out as expected, and it hasn't changed pricing for the Fed. We do have a meeting 28th of Jan at the end of this month. Market's pricing at almost zero probability the Fed's going to cut. And the next meeting in March, the market still is looking at only less than a 30% probability the Fed's going to cut. So the market's not getting any sort of tailwinds from any sort of Fed cuts in the first quarter of this year. The only other thing that really stands out this week is that Bitcoin has sort of come back to life a little bit. Finally, it broke above resistance this week around that 94.5, 95,000 level. Had a sort of a first run up towards 100,000, stopped around just before 98,000. Look, that's no surprise. Obviously, it's a psychological level, and traders aren't going to be spiking it well through there. They're going to need something else to help. No doubt they're going to probably need Nasdaq making new record highs. At the moment it's around 600 points away from that. But anyway, look, it's a bit of a life scene there. So let's see how that plays out. But in any case, probably we will trade quietly into the weekend. Maybe towards the close, markets might get a touch nervous with gap risk for Monday. So good luck with your trades, and we'll catch back in with you shortly.